All right, folks, welcome back. This is episode 34 of the ICT Mastery Mentorship. In this episode, we're going to be going over internal and external range liquidity. Now, for a concept explanation or clarification, it isn't really needed. It's pretty self explanatory. It's just liquidity that's inside of a range, which is obviously internal, and then liquidity that is outside of a range, which is obviously external. Pretty simple, right? Here's a couple things I need to say because I'm sure you've heard if you're, on the day trading side of Instagram or the day trading side of TikTok or the day trading side of Facebook, just just the social media side of the trading industry. That's what I'll call it. If you're on that side and you see ICT type videos or ICT related videos, you've likely heard someone say that a fair value gap contains liquidity, which is nowhere near true. Fair value gaps do not contain liquidity. Want to know why? I've explained this before. Because for liquidity, think of it like this, right? If we are jumping higher to seek buy side. Okay, listen here. I mean, is that what it is? Yeah, if we're jumping higher to seek buy side, what are we doing? We are looking for, we are willing to trigger buy stops and we are taking out stop losses for shorts. Simple, right? Yeah, very, very simple. A fair value gap needs to get filled so both sides of delivery, both sides of the market can be efficiently delivered. Okay, like this fair value gap here. This fair value gap only contains sell side delivery. So we can't look for buy side delivery inside of, buy side liquidity inside of a fair value gap that only has sell side delivery. Doesn't make any sense. It just doesn't. Fair value gaps are simply inefficiencies between both sides of the market whenever one side is too aggressive. That's it. That's it. Okay. So don't you ever, when I say don't you ever, okay, I need to say this to you multiple times. Never refer to a fair value gap as liquidity. Instead, refer to it as an imbalance. Okay, I've taught you this. Please remember it. Okay, you're gonna remember. You're gonna remember my voice in your head. Anyway, internal and external range liquidity. Now, internal and external range liquidity, I said it forms in and outside of a range. But what range am I talking about? Dealing ranges. I taught you about dealing ranges in, let's see, where's it at? Episode 2 and 3. So if you skipped some of these episodes, this is gonna hurt. This is gonna sting. Okay, you're stepping on a landmine right now. So take your foot off of it and try to go to the next teaching. You're gonna get blown up. Do not skip any of these episodes. They can hurt you. Anyway, back to here. I taught you that you can draw a dealing range from liquidity purge to liquidity purge. What you can also do is draw it from swing to swing if there is displacement within that range that is, swing to swing. So for example, nope, wrong tool. Here to here. It's just two random swings. Did we purge liquidity on either sides? No. Well, on the buy side, yeah. These little equal highs right here, but we didn't do either sides. Well, how is this a dealing range? Because it has displacement in the middle. It creates a high, it creates a low, and it moves pretty quickly. So what is that? That's a potential range. So any liquidity that'll be inside this range, so anything in here, inside of that blue shaded box right there, would be liquidity. Now I'm going to say this one more time. This thing right here, that right there is not liquidity. Understand that. That is simply an imbalance between two sides of the market that needs to get filled, in which the market will tend to seek to fill it. I don't know if I said that right, but the market will seek to fill it. Okay. I'm going to drill that in your head so you will not think that because people will literally tell the trading industry is very, very corrupted, especially the ICT side. Oh my goodness. And I'm trying to do my best to clear it up just a little. I'm only just a small little pebble. See, small little pebble. Just 1,200 subscribers. Small little pebble. But anyway, I'm getting a little too off topic. Let's just do it from liquidity purge to liquidity purge. Okay. So from, see, where's a low here? We can do this low. That swing low there. What's that? That's liquidity purge. A sell side liquidity purge. Then we have this high here, which is buy side, which is a buy side liquidity purge. So from deepest swing to deepest swing on both sides after each liquidity purge would be this swing down here to this swing down here. Simple, right? Yeah, very, very simple. So now we have our dealing range. We can really liquidity purges now. Now that we have our dealing range, what liquidity is internal? Can you see it? Can you see it? I sure can see it. You got that low right there. That's internal. You got that low right there. That's internal. You got that low right there. That's also internal. Then you have this low right here, which is also internal. Oh, isn't that fair value gap internal? Nope. Don't even. Don't make me mad. Come on, don't do that. Anyway, you now know what internal range liquidity is. It's literally liquidity that is inside of a dealing range. What price will tend to do is seek internal range liquidity before hunting external. Now, what is external liquidity? External liquidity can be liquidity that's down here because it's what? It's outside of the dealing range. It can also be, hold on, I have to burp real quick. Whew, talking a little too fast or maybe a little too much. These teachings exhaust me sometimes. Anyway, external liquidity can be literally outside of the range, or it can be the high or the low of the dealing range. Jesus, I'm having brain fog. Jesus Christ. But yeah, literally, external range can be externally outside of the range. It can be this right here. Simple, right? And then I'm going to say this one more time because some people would tend to forget this. External range liquidity can also be the high and or low of the dealing range that you drew, which is here and here. See that? Now let's look at something here. Let's look at something. You see how let's say for example we take this off, right? And just use this displacement range right here as your dealing range. Now let's draw this out. Let's say you just use that. Pay attention here. Pay attention. You see how right here we drop down into internal before looking for external, which is up here? See that? That's what price will tend to do. It'll hunt internal to go to external. So you can remember like this. Internal to external. Once it does external, it'll be external to internal. Simple, right? Because guess what? Once it goes outside of that dealing range, it's going to do what? It's going to create another dealing range and it's going to return back into that dealing range, which will then become internal liquidity. It's that simple. Okay. So guess what? We are internal over here. We're internal. We go external. We create a new dealing range, which will be from, if I can draw it, here to here. Now we have a new dealing range. So now we're internal since we created a new dealing range. But from this here, let me see, from here to here, it would then be external. You get it? So it's internal to external, external to internal. Nothing too hard. Now, going back to this dealing range here, like I said, price will normally hunt internal range before going to external. Okay. But sometimes what price will do is simply create a bigger dealing range. And when I say bigger dealing range, I mean that literally. So for example, you see around here, look at this price action right here. This is the dealing range high right there. Price just runs the dealing range high. Well, what does that do? It just expands the dealing range. It just pulls it out. That's all it does. It just pulls it out. Because guess what? We haven't, if we're doing liquidity purge to liquidity purge, that technique, it hasn't purged any sell side liquidity. It hasn't. Or it hasn't purged anything past this, or it hasn't even purged this itself. Because to create a new dealing range, we have to purge the opposite side of the dealing range. And we only do that until right now. So from that high up there, right there, to down here, anything inside this range would be internal liquidity. Pretty simple, right? Yeah, it's pretty easy. It's pretty darn easy. So going back to this dealing range first, because I need to explain something to you up here. Price will tend to make a dealing range bigger. Sometimes, if it really wants to, it'll tend to reach an extreme premium because that's what's happening here. When we are making a dealing range bigger on either sides of it, like for example, if we had this low right here, right, and then we drop past it, we're going to an extreme discount. We're making an even deeper discount for that dealing range because we're expanding the dealing range lower. So we're creating a extreme discount. But in this example, we are pulling the dealing range higher, which is creating an extreme premium. And when we are in a premium, what do we want to do? We want to sell off, or we would tend to sell off. It's just simple, right? If we're premium or if we're at expensive prices, we'll want to sell it up here, get it at a discount. If we're at discounted prices, we want to buy it there, sell it at a premium. Easy. It's nothing too hard. So since it pulled the dealing range higher into a what's the word? Jeez, I can't get it. Man, I can't get it. Geez, I'm having brain fog. I'm gonna keep this in here just so you guys can experience every single attempt I take to record these videos. Man, I forgot what I was gonna say. Anyway, we created an extreme discount by pulling the dealing range even further. So what price has to do next is since we've gone internal, we have to go external. Remember, internal to external, external to internal. So since we've gone external, what do we need to do now? Internal. Where's internal? This low here, this low here, this low here, and that low there. And you know what's funny? It happened this morning, actually. The day of, what's today? 14th, Wednesday, January 14th, 2026 is the day when it happened. When we went from external to internal. Simple, right? Yeah, it's real simple. It's really not that hard. Want to do one more example? Sure, let's do one more. One more. Okay, here we go. Let's see here. Where, how can I find a dealing range? Let's see. I'm trying to just find one for me. I mean, for you. I'm saying for me like I'm teaching myself. Ha, I'm so goofy. Anyway, can I not find one? Holy, jeez, man. Okay, here we go. I found one. Kinda. If I'm trying to find one that's from Liquidity Purge to Liquidity Purge, but I just can't find one. So I'll just do this one here because it's still kind of purging buy side, so it kind of counts. Anyway, this is our dealing range here. I'm gonna pull it all the way out like this. Okay, there we go. Now I got a clear view. Now look down here. First of all, look down here at the sell side of the or the discounted part of the dealing range. You see how price is pulling it lower, or it's expanding the dealing range lower? What's happening? We're creating an extreme discount. So we go from here. Oh, why is my mouse doing that? This mouse has been doing that recently. It'll like double click on its own. But we went from here to here. So we've created an extreme discount. What's going on now? We've, or not what's going on now, but what has happened externally. We've created, not created external liquidity, but we've externally went outside of the range. We went external, basically. I can't really put the words together to really explain it to you, but externally we went outside of the range. Or you get what I'm saying. We went outside of the range, creating a bigger dealing range. So now that that's happened, we went external. What do we have to do next? Go internal. Where's the internal liquidity? Uh, right there. Right there. Right there. So at this point here, at that point of the candle, if you look on the, what is that, the right side, you see how it says 25746.50? See that over there? Let's see if I can get it for you. See that pricing right there? On the left side? That is the exact pricing at which it broke the internal range highs. Is there any other internal range liquidity? No. So, if you want to keep going higher, since we've been pulled down to an extreme discount, what do we have to do next? We've gone internal. What's after that? External. Where's external? Right there. The high of the dealing range. Whoa, we take that out. So now we draw the dealing range to here. Simple, right? Because we've created a new premium, which is that high there. So now that we've gone external, what do we have to do now? We have to reprice to internal. And guess what? It returns inside of the range, hunts this right here. See that? That's the internal liquidity it's looking for. It hunts it, bow. Now that it's gone internal, what can it do next? If it really wants to keep going lower, it can go external, which is here. Does it do it? Yeah. So now we have a new dealing range. Since we've gone external, what's next? You have to go internal. Oh my God, are you saying these gaps are liquidity? No, no, never that. Never that. You will never hear me say that. But if we were to go back to this day, let's see, what day is this? December 10th? Let's go to December 10th. Hopefully I can go to it because trading views data is kind of weird. Okay, here we go. Yep, here it is. Wow, there really was barely any internal range liquidity. Jeez, it was mainly just a bunch of fair value gaps to fill. That's really why I pulled it up all the way to this swing high right here. We have that point of liquidity there, and then we have that high right there. We got that high right there too. So we got 3 points of liquidity. I don't know why it's the color of my liquidity purge drawing, but it doesn't really matter. You get it. We've went external. What's next? Internal. Do we do it? Yep. Boom. And we hit that high right there. So since we've gone internal, What's next? We need to go external. External, where? Which direction? We can either go down and hit the dealing range low, or anything that's outside of this area, like anything that's all the way down here, that's still external. But just for a minimal external range liquidity target, we'll just use the dealing range low. Did it do it? Nope. So what is it going to go external for? Or try to go external for next? It's going to try to take out the high. Does it do it? Let's see. Barely. I think it does it by just... No, it actually does not do it. Geez, it fails by... What's that, 7 points and a tick? Dang, that's pretty close. Anyway, since we've gone internal, what do we do next? External. To where? To where, JJ? Where do we go? Down there. Remember? Down there. Do we do it? Let's trace it. Now we go up, then we gap down, then we accumulate, then we drop, okay, then we retrace, and then whoa. Whoa, see that? Pretty easy. Pretty easy. This is a pretty easy episode. Took it easy on you on this episode, okay? Anyway, this is the end of episode 34. Hope you I think, not even gonna say think, you should have learned a good amount of things from this episode alone. Just from learning about dealing ranges. I didn't really mean to put too much on dealing ranges, but hey, you learned more stuff. So hey, use it when it comes to your ability to trade, enhancing your ability to trade. Anyway, I talked for a little too long now. 60 minutes, 31 seconds. I need to end this video right now. I'll see you guys later. Good luck and good trading.